Shreve. Okay, good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. I am your host, Ken Shreve. Thanks very much for tuning in. The number to use to get through is 877-927-6648. That's toll free if you want to talk about this market, what looks like 2 straight days of gains for the major averages. Again, that's 877-927-6648. Couple of house cleaning items here. My show airs every Tuesday and Thursday from 3 to 4 p.m. Eastern on TFNN. I'm on Channel 1 in Tiger TV. You can access Tiger TV right on the homepage of TFNN.com, and you can look at charts that I'm going through on my show right along with me. You can also get the show anytime on iTunes. If you can't listen live, you can just do a search for Breakout Investing, or you can search my name on iTunes and download the podcast. And another way to listen to all TFNN programming is with your smartphone. Just plug those earbuds in, type in tfnn.mobi in your smartphone browser, and you can get the stream 24/7. So that's the deal there. Today is Tuesday. That means the latest edition of my Ultimate Growth Stocks newsletter was emailed to subscribers earlier today. I publish my newsletter every Tuesday, and I send out email buy and sell alerts in between, sometimes just a market update letting you know what I'm thinking about the market, and I have a model portfolio that goes along with my Ultimate Growth Stocks newsletter, and right now I have only 6 stocks in there. I'm more optimistic about two straight days of gains for the major averages, seeing some compelling setups out there, but I would say that for every one bullish chart I see out there, I probably see 7 or 8 bearish ones. So the crop of potential leaders is not where I want to see it. We saw yesterday's market action where we were lower for most of the day due to these persistent concerns about Europe's finances, the sovereign debt concerns over there, and we were negative for most of the day yesterday, and then boom, what was it, the last half hour of trading, everything just turned around. There was a report in the Financial Times that said that China might start soon buying some Italian bonds, and and stocks eventually ended with nice gains yesterday. Now, if you saw the volume behind yesterday's games, I mean, boy, was that just another huge disappointment. So we had this nice upside reversal on the NASDAQ. We did that on volume of 1.95 billion shares. The prior session NASDAQ volume, index got hit pretty hard on volume of just over 2 billion shares. So yesterday, volume came in lower than Friday. And today, it looks like NASDAQ volume, looks like another reasonably, good day for the market. Some nice movers out there. But volume at this point looks like it is tracking lower than Monday's level. So again, this persistent, consistent story about weak volume in the market behind up days, and it is a bit of a concern. It doesn't mean that you have to completely sit on your hands. I mean, I know one thing for all the years I've been doing this, that when you have weak volume behind rallies, it typically makes for a weak foundation. Now, new money, might start to come in from the sidelines, maybe this week, maybe next week, maybe it's after the Fed meeting on September 20th, 21st. We'll talk about that in a little bit. But right now, the market's concern seems to be on Europe. I think there's a chance we could, start to see some positive headlines come out of that come out of that region. I am again impressed by the buying that we've seen the past couple of days, albeit in light volume. Just a couple more things about my Ultimate Growth Stocks newsletter. I launched it in late April at TFNN, and you can get a 2-week trial right on the home page. You can click on the newsletters tab right at the top of the home page and then click on investment letters. I think I'm also pretty easy to see right there on the home page as well. But just a little bit, I don't talk a lot on my radio show about how I go about picking stocks for my Ultimate Growth Stocks newsletter, but you'll hear some advertisements on the air that talk about me as a top-down investor. That means I pay a lot of attention to what the overall market is doing. Am I seeing signs of accumulation in the major averages? Is it clear to me that money is being put to work in the market? So when I'm comfortable that an uptrend is taking shape, that's the time when I start nibbling at stocks, and I'm probably more active buying stocks for the model portfolio. During periods of market weakness, when I'm seeing signs of distribution or heavier volume declines in the major averages, that's when I'm pulling back, keeping a tight leash on new initiations, not letting small losses get out of control, minimizing losses. That's a key part of my strategy. I use fundamental and technical analysis when evaluating a stock. I may see a stock that looks good technically. That's half of it. The other half is I want to make sure that it's an entrepreneurial company that is innovating with a new product, a new service. I'd like to see good earnings and sales growth in recent quarters. If the rate of growth is accelerating, that's even better. High return on equity, good profit margin. Institutional sponsorship is important. Are there mutual fund managers that are gravitating towards this stock? Is it in the early stages of a price run? And that's an issue that we're dealing with right now. We're more than 2 years into a bull market, and there are a lot of stocks over the past couple of years that are up several 100% that are even setting up again right now. We'll go over a couple of those later. I mean, after a 500, 600, 700, 800% price gain over the past 2 years, are these growth stocks really worth buying up here? So I like to get stocks in the early stages of a price run and typically avoid those that have run a lot already. I tend to target strong price performers in an industry group, not weak price performers. I buy strength. Simple as that. I buy strength. I buy stocks that are going up. I don't buy stocks that are going down. I mentioned that I avoid extended stocks, even though I like to buy stocks showing good earnings momentum, good relative price strength in the market. I'm very careful not to chase stocks. I don't like to buy stocks too late. That's an easy way to sit on a pretty quick loss. So I'm careful not to avoid extended stocks. And I mentioned the late stage bases, stocks that have formed a series of bases during a lengthy uptrend. That could be in the later stages of a price run. There are several examples of that right now that I've talked about in recent months on my show, and they're just a little more risky to buy. All right, let's just take a look and see where we're at in the market here with about, 45 minutes or so left to go in Tuesday's session. We have stocks are a little bit off their highs. The Dow has been lagging most of the day. It's only up 22 points now, up 0.2% to 11,083. The Nasdaq is outperforming for the second straight day, up 31 points at this point. That's 1.25% to 2525, and the S&P 500 up almost 7 points, that's 0.6% to 1168. Taking a look at a chart of the S&P 500, one of the main issues for the market here is overhead supply. The S&P 500, for example, is still quite a ways from its high of 2862. It was back in this area right here. You can see the S&P 500's 50-day moving average is at 1236. Like I said, it was recently trading around S&P 500 at 1168. So it still has a ways to go to get back up to its 50-day moving average. That could be a pretty significant resistance level for the index. In order for it to get through that, we're just going to have to see new money come in from the sidelines. We just haven't been seeing it lately. This is a topic that I've been writing about recently. Really, a new market uptrend is gonna need institutional money coming in from the sidelines to work, and that may go without saying, but it is true. You can only have so many low volume rallies before heavy volume selling starts to enter the fray. So I'd like to see money start to come in from the sidelines. The big volume will always give them away, whether it's on the NASDAQ. Maybe we see a 1.5 billion share day for the S&P 500 for the Dow, or maybe it's a 2.5 billion, 3 billion share day on the NASDAQ. When you get that big volume surge in the indexes, that's a sign that new money is coming in. So we mentioned the S&P 500 still, up. Looks like two straight days now, but it does have some serious, potential selling pressure that it's going to be facing in coming days. It has a high of 2611 right in this area here, which could face some selling pressure, and then this high right here, just over 1200, it could face some selling pressure there. So hopefully we'll start to see some volume come into this market. It feels like we're going to get a positive headline out of Europe sooner rather than later. I hope I'm right. I may not be right, but that could provide some juice, for this market. Let's move over and take a look at the NASDAQ composite, which I said has been outperforming the past couple of days. NASDAQ up about 1.1% now to 2521. Same issue with the NASDAQ. In fact, I think I gave the NASDAQ number when I was talking about the S&P 500 chart, but NASDAQ has a high of 2611 here that it's going to have to contend with. Its 50-day moving average is at 2621. So let's swing back to the S&P 500. Give you some correct numbers here because I misquoted. We'll pull up the S&P 500 here. Let me get that. All right, so you have a high here just over 1220. It's going to be a resistance level in the S&P 500, and then another high here just over 1200. So there is going to be some resistance, some potential selling pressure that the major averages are going to have to deal with. Hopefully they'll be able to do it, but it would be good to see some volume. Taking a look at crude oil today, that was up 2.3% to $90.29 a barrel. Gold has kind of taken a back seat here, which is fine. It was up $16.80 today, or 0.9% to $18.30.10 an ounce. Taking a look at the Spider Gold Trust, which tracks at 1/10 the price of an ounce of gold. The GLD currently up 1.2% to 178.74, still holding well above its 50-day moving average at 166.31. So I am seeing some stocks setting up here. They're not far from breakouts. They need volume to work. Hopefully we'll see some volume pretty soon, but we'll go over some of those names when we come back. Stick with us.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of tfnn.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, seen daily at tfnn.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real Money Masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of tfnn.com and order Mastering Probability. It'll change your life forever.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of tfnn.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of tfnn.com.
Welcome back, everyone, to Breakout Investing on TFNN. I'm your host, Ken Shreve. Thanks for tuning in. Again, the number to use to get through is 877-927-6648. Before I went to break, I said we were going to talk about some movers today. I wanted to take a look at Green Mountain Coffee Roasters. Stock is off its highs. We are coming in a little bit into the close here. Major stock Dow, I see, just turned negative. We'll update that in a little bit. But Green Mountain Coffee Roasters off its session high, up about 0.6% to 110.60. Volume is pretty strong in the stock today, and this is kind of the issue that we're dealing with right now with stocks that attempt upside breakouts. Green Mountain did have some volume, did have some juice behind the move today, but after hitting an intraday high of $114 a share, it's down around 110.60 now. So typically you don't want to see that on a breakout day. You want to see buying demand strong enough and at least get a close near a session high. But think about Green Mountain Coffee Roasters is as much as I'm embracing this company's growth story. If you swing back, we'll take a look at a weekly chart here. This is a classic example of a stock that has run up a long way already. You can see that it was a $30 stock back in 2010, it has more than tripled in price, and you have to think, I mean, it's a high multiple stock. Yes, it's a fast-growing company, but has it made a big enough price move already where you have to be cautious about expecting more multiple expansion up at these levels? No one doubts that Green Mountain is going to continue to produce strong top-line growth in the third quarter and the fourth quarter, but again, it's working on 4 straight weekly price gains now. Switch back over to the daily chart, and we'll see that it is trading near its session lows today after hitting an intraday high of 114. Shares trading around 110.59. So not great action in Green Mountain Coffee Roasters today. Let's also take a look at a stock that I've been following recently, Casey's General Stores. Remember, this company reported earnings last week, and it actually came under quite a bit of pressure. I remember, giving a heads up about the earnings report last week on my show, and the numbers were pretty darn good. I don't know, the market had high expectations or what, but the quarterly earnings were up 27% year over year to $1.03 a share. I think that was a couple of pennies below estimates, but the revenue growth accelerated again sequentially at Casey's General Stores. This is a company that operates convenience stores in the Midwest. So revenue's up 38% last week to $1.87 billion. The stock is breaking out today. There's a little bit of volume. Looks like volume is going to end up being slightly above average, so not huge volume. But Casey's General Store shares are up 2.25% to 46.34. Swing point right in this area here around 46. So buying breakouts. Obviously, it's still a risky environment for breakouts. I think when we do see signs of institutional money coming in from the sidelines, and it could be after the Fed meeting on September 21st. It could be if we get a positive headline out of Europe. As layers of uncertainty start to get peeled away in this market, I think that's the time when a lot of the big money will start thinking about coming in from the sidelines when they believe that it's a less risky environment for stocks. But in order for breakouts to work, bottom line is that you need heavy volume to fuel the breakouts. You need institutional money coming into the market. That's why it's still a bit of a sketchy environment for technical breakouts. But Casey's General Stores acting okay today. Again, the stock recently up 2.25% to 46.34, trading just above a buying area of 46, which is its intraday high right in this area here. Let's also take a look at another name I'm watching here, Bed Bath & Beyond. Stock is actually enjoying a nice day. Volume not great, but it is breaking out today. Shares up 2.1% to 59.22. That's Bed Bath & Beyond. Really a high-quality retailer here. Like the company a lot. It's got a good track record of execution. Breaking out today over $58.30, which is its intraday high right here. Bed Bath & Beyond reports earnings on September 21st. So this is something to keep in mind. They're coming out with earnings soon, but such a great track record of execution at this company. Really like the stock. I think we'll see a strong quarter from them when they report on September 21st. Stick with us, and we'll be right back, folks.
If you're in the market for a jumbo loan anywhere from $417,000 all the way up to $3 million, and you have a FICO of at least 720, then EverBank is your answer. For more information, call EverBank today at 877-471-5970 to talk with a member of their concierge team that will walk you through the variety of loans they offer. That's 877-471-5970, and let them know you heard this offer on TFNN. EverBank, 877-471-5970.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, more than 40 different mining equities, as well as some of the most popular precious metal ETFs, including the GDX and the SLV. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report that will help you take advantage of investment opportunities at the current historic gold price levels. To order your Gold Report today with a free 30-day trial subscription, log on to TFNN.com or call our office directly at 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is a mining company engaged in the exploration and development of two emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the fourth quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. My name is Ken Shreve. Thanks very much for tuning in. So the bottom line is, man, there are definitely stocks around. There are definitely growth stocks around that are capable of leading this market higher. And we can, take a look at several what I consider institutional quality names that should be able to do that heavy lifting again once we start to see volume come into this market. Once we start to see signs that money is coming in from the sidelines. And you look at a name like Apple. Apple is dancing right around its 50-day moving average. Its 50-day line is right around 376 or so. The stock is having a good day today, up 1.4% to 385.29. It's not far from a potential breakout here, and that's worth paying attention to in this type of market. Apple is the type of stock where if you can get a heavy volume breakout and pretty much looking at this 392 level right in this area here, that would be the swing point. Again, shares right around 385, so it's only about seven points or so from a swing point, and it is showing good action at its 50-day moving average. Question is, are we going to get volume in the stock? Apple normally trades about 21 million shares a day. What are the chances we see a 35, 40, 50 million share day at least for Apple? In order for that to happen, again, we're going to need to see money. We're going to need to see big investors coming in to play. It's not out of the question. Let's hope it happens sooner rather than later. Another high-quality stock here that's worth paying attention to. A name that I've talked about in the past, but again, a name that is setting up pretty darn good here. Intuitive Surgical, ISRG, on the Nasdaq. Resistance right now at 389. That would be right in this area here. Shares are up 2% today, outperforming to 379.31. So only about 10 points away from a swing point. Just like Apple, the low volume breakouts really are, you don't want to see it. You really want to see some of these potential leaders, and Apple and Intuitive Surgical, you want to see them really bust out of the gate in heavy volume. Another high quality leader that is also setting up here, Amazon. Amazon is rumored to be releasing a tablet computer maybe before the end of the year. It's probably going to be cheaper than some of the competitors' tablets out there, but Amazon in a very nice technical setup here, looking to break out over resistance at 220.64. That would be right in this area here. Apple at 218.97. So here, we're only a couple of points away from a possible breakout. Shares of Apple up just over 1% today to 218.97. So there you have three high-quality stocks that are looking good here. You've got some spec names that are also acting well, but really it brings up an important point that when you're getting ready for a market rally, when you're getting ready for the possibility of new money coming in from the sidelines and perhaps a bona fide uptrend gaining traction, you want to be in the right stocks. If you're in a stock with a $100 million market cap or $200 million market cap, maybe it trades 100,000, 150, 200,000 shares a day. Really, generally don't consider those the institutional quality stocks. You want to look for the really large liquid names that have good institutional support with the best charts that are acting the healthiest technically. And again, I would include Amazon in there, Intuitive Surgical, Apple. One name that was looking good, for a little while was Priceline, another stock I would consider an institutional quality stock, but I think its technical picture doesn't look bad, but it's definitely more worse for the wear than Intuitive Surgical, Apple, and Amazon. So all right, folks, stick with us. We're going to break back in about 3 minutes.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to thefrontoftfnn.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, seen daily at tfn.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real money masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks, something you'll never get back. The time is now to take action. Go to the homepage of tfnn.com and order Mastering Probability. It'll change your life forever. At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Let's see here. The folks, my friends over at Investors Business Daily earlier today released the latest reading from their IBD TIP Economic Optimism Index, and it's really the first reading on consumer confidence every month. Later this week on Friday, we've got the University of Michigan that's going to have their first look on consumer confidence for the month of September. But some pretty good news from the IBD TIP Economic Optimism Index earlier today. The index rose 4.1 points. That's 11.5%. Up 11.5% in September. Came in at a reading of 39.9 versus 35.8 in August. Last month, the index sank to an all-time low of 35.8. Now, remember, readings over 50 indicate optimism. Below 50 indicate pessimism. So we're still in decidedly pessimistic territory here, but it did come in, much higher than August readings. So that's a good sign. The index has three components. They all rose in September. That's a good sign. The 6-month economic outlook is basically a measure of how consumers feel about the economy's prospects in the next 6 months. That increased 5.2 points, or 16.4% to 36.9. The personal financial outlook, a measure of how Americans feel about their own finances over the next 6 months, that improved 4.8 points, or 10.3% to 51.6. And finally, confidence in federal economic policies. That's a measure of views on how government economic policies are working. That was up 2.5 points, nearly 9% to 31.3. So pretty good reading. Hopefully that will bode well for the confidence reading later in the week from the University of Michigan sentiment. Pretty quiet week in terms of economic data this week. Tomorrow we've got the latest reading from the Producer Price Index. We've also got retail sales data for August. In terms of wholesale prices, they are, let's see here, the Producer Price Index is, overall prices are expected to be up 0.2%. The core rate, which excludes food and energy, that is also, that's actually expected to be up 0.2%. Overall prices are expected to be flat. In terms of retail sales, consumer spending continues to do pretty well. It's probably the one sole bright spot in this economy, but retail sales in August are expected to rise 0.2%. Excluding autos, they should be up 0.3% or so. On Thursday, we have weekly jobless claims. They're expected to fall 4,000 to 410,000. We've got the latest reading on consumer inflation. That comes on Thursday, and also the latest reading from the Philadelphia Fed Regional Manufacturing Survey that manufacturing activity in the Mid-Atlantic region in August was dismal. Remember, that index came in at minus 30.7. It's expected to come in at minus 10 this time around, which is not great, but still much better than the bad reading from August. And then the University of Michigan sentiment on Friday, that's expected to rise slightly to 56.3, up slightly from 55.7 in August. Talked about potential catalysts for this market. Maybe it's a positive headline out of Europe. Again, it kind of feels like there's stuff happening over there where we could see a positive headline sooner rather than later. Of course, the next Fed meeting on September 20th and 21st. I mean, the issue here, what's interesting is that most people already know what the Fed is going to do. I mean, don't we have a pretty good idea? I mean, they want to keep interest rates low, but most think the Fed is going to announce some sort of Operation Twist, something that they've tried before. I think it was back in the 60s, basically where they sell short-dated Treasury debt and then they use the proceeds to buy long bonds. And the goal of that is simply to flatten the yield curve, basically lower long-term interest rates, and that should stimulate the economy. Whether or not it stimulates the economy, who knows? I mean, rates have been low for a while. What that's done to spur job growth and these types of things remains to be seen. But it was interesting earlier today in an interview, Dallas Fed President Richard Fisher said, it's really more about Congress at this point and them working together to alleviate some of this uncertainty in the market. He thinks the Fed has done pretty much all it can do, and I have to say I agree with him. I'm not sure that an Operation Twist or another round of quantitative easing or additional stimulus is going to really do anything at this point. Will it provide more stability? Maybe, but let's hope that Congress can work together here in coming months and get some stuff done. In terms of earnings today, pretty quiet, but Best Buy, we could take a look at shares of Best Buy. They were under quite a bit of pressure at last check. We'll take a look at Best Buy here and see how it's doing. Down a little more than 6% to 23.40. Again, the dangers of catching a falling knife, the dangers of trying to catch a stock on sale, that is certainly front and center here with Best Buy, a company that has had a tremendous difficulty executing in recent quarters. Competition from Walmart, competition from Amazon, profit margin eroding. The news wasn't good. Earnings down 22% year over year to 47 cents a share. Sales were basically flat at $11.3 billion. Same-store sales fell for the fifth straight quarter. They were down 2.8%. So the news wasn't good. Stock getting hit as a result, down more than 6% to 23.40. The company did announce this Best Buy marketplace. Basically, it hopes to better compete with Amazon. The new service will greatly increase the number of products available at the Best Buy website. Also take a look at J.P. Morgan, some widely held names here. Financial stock that has been hit hard. It got an upgrade today. It's well off its high. It hit a high today of 33.41. Shares were recently trading around 32.60, up about 0.5%. Stifel Nicholas had positive things to say about the company, saying the stock is cheap enough now to warrant a buy rating from hold. They set a price target of 40, but this is damaged goods. I just don't see any benefit in owning the financials here, especially after a lot of the setups that I talked about earlier in the show. Talked about names like Amazon, Intuitive Surgical, Apple. So avoid the financials for now. Focus on those stocks that are, holding up well, holding above support, that have charts that say, look at me, I'm thinking about going higher. Again, they're going to need volume to do that, but seeing some intriguing setups out there, trying to stay as optimistic as possible. We'll be right back, folks.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, everyone. So we had a nice little pop for the markets as we head into the close here. About 5 minutes left to go in Tuesday's session. The Dow up 37 points, 0.3% to 11,098. The NASDAQ tech stocks outperforming nicely, up 37 points or so to that's 1.5% to 2531, and the S&P 500 up 9 points, 0.8% to 1171. Mentioned the volume in the market today. It has picked up the pace a little bit. That's good to see. Volume right now is tracking very close to Monday's levels. Obviously it would be nice to see it well above Monday's level. On the NYSE yesterday we had volume of 1.08 billion shares. Looks like it's going to be pretty close to that today. On the NASDAQ yesterday, volume was 1.95 billion shares. We should come in pretty close to that level as well. But again, when we see these gains, 1% gains, 1.5% gains, just meaningful percentage gains for the market, it would be nice at some point to see NASDAQ volume hit 2.5 billion, or again maybe 1.25, 1.5 billion for the NYSE indices. So not overly impressive volume today, but again, the theme of today's shows is just kind of paying attention to stocks that have the ability to lead from here. There are some decent technical setups. Lack of volume is a potential problem, and if we start to see these breakouts in light volume, it's really a tough call. On the one hand, some of these stocks may pass swing points, they may break out, but if volume isn't strong, buying low volume breakouts is typically pretty risky. All right, coming up tomorrow, there's some interesting earnings reports that I wanted to take a look at. One is actually not tomorrow, excuse me. These are earnings reports for Thursday, and I wanted to take a look at Diamond Foods. That's ticker DMND on the NASDAQ. This is a company, they're expected to produce pretty decent profit growth that you can see technically setting up nicely. It's finding support at its 50-day moving average. Could try for a breakout over its recent high of 80.16 right in this area here, but this is not an institutional quality stock like an Amazon or an Intuitive Surgical, something like that, but still a high quality name with pretty darn good fundamentals. And Diamond Foods, they make snacks, nuts. They recently bought the Pringles unit from Procter & Gamble earlier this year. That deal is expected to close by the end of the year. Should add about $1 billion in sales annually for Diamond Foods. So we'll see if this company can report strong earnings on Thursday. And also on Thursday, it'll be interesting to see what Research in Motion has to say. They're going to be coming out with earnings as well. This stock has been beaten up pretty good. It has been in rally mode lately, kind of holding firm right around that $30 price level. Stock is not participating with the market today. It's down about 4 cents to 30.13, but Research in Motion will be out with earnings on Thursday. They're expected to report earnings of 86 cents a share. That would be a 41% decline from a year ago, with sales down 4% to 4.45 billion. So there have been some signs of accumulation in the stock recently. Will it be enough to help it going forward? It's a company that is obviously in some trouble, growth rise. So investors will be looking to hear what RIM has to say about the BlackBerry playbook. It's relatively new tablet, and we'll see what happens. As we head into break here, let's take a look at one last stock that's hanging in there pretty good. Hansen Natural in a good technical setup here after recently bouncing off its 50-day moving average. Stock is up 2.4% today to 88.31. Hansen Natural looking good here for a potential breakout. I'll be back on Thursday.